The month of November is going to be very special for the stock market. It can turn into a recession for many stocks. Despite the fears of recession, this time the Muhurat trading was the best in the last 14 years and the benchmark indices closed with a gain of about 1%. We are saying this because 20 companies whose shares were listed last year, the pre-IPO anchor investors lock-in period is going to end in November. If anchor investors exit from the stock, then there can be a big fall in the shares of these companies. You know what happened with Zomato. Uber and Tiger Global sold some of their stake in the company as soon as the anchor investors' one-year lock-in period came to an end, leading to a 22% decline in Zomato's stock in July. In fact, according to SEBI's rules, the pre-IPO investor could not sell the stake in the stock for 1 year after its listing, but from April 1st, this lock-in deadline has been reduced to 6 months. IPO of about 8 companies including Delivery, Rainbow Children's Medicare, Campus Footwear and Paradeep Phosphates came in or after April, whose lock-in period will get over in November. On the other hand, companies where the anchor investors' lock-in limit of 1 year is coming to an end in November includes companies like Paytm, PB Fintech, Nykaa, Sapphire Foods and Finopayment. Of these companies, only Go Fashion, Rainbow Children's and Campus Footwear have seen positive returns ranging from 2 to 7% in the last 1 month. And most of the other stocks have seen a decline of 20 to 35% in 1 month. Nykaa stock fell below its IPO issue price of 1,125 rupees on October 25th. Now the big question is, what should be done in the shares of companies whose lock-in deadline is coming to an end in November? Arun Mantri, founder of Mantri FinMart, says that those companies whose lock-in deadline is expiring next month, there can be huge fluctuations. More pressure will be seen in those stocks where the share of private equity will be more. Mantri says that those who have shares in these companies should exit from them for the time being. If they want, they can take re-entry after the completion of the lock-in time limit. Those who want to make fresh investments should avoid investing in these companies because there are stocks with strong fundamentals in the market at good valuations.